Hi there once again, and we are on the last but one unit chapter of the book, and it is the taxes affecting real estate. So let's just go through this. It's a relatively shorter math chapter, but you are going to get a few questions out of it. So let's just go on to what we're looking at. So we're talking here about city and county and actually school taxes as well. Your home, if your home is in a city, then you'll be paying city taxes and county taxes and school. If you're not in the city limits, then you'll only be paying county and school taxes. Remember that. The tax process is based on ad valorem. The ad valorem means a price according to the home value. So according to value. In other words, what this is meaning is the more value your home is, the higher the taxes will be. And is levied for a calendar year. The tax year starts on January the 1st, ends December the 31st. And in November, you get a tax bill, and it's basically for the taxes you've accrued during the year. And it's done according to a budgeted tax schedule, which the county get together with all the various tax districts and come up with the taxes they want out of you. Have a quick look here, not in the book. This is for Manatee County, 2017, but here is the revenue by source. So it says here that the property taxes account for 35% of the amount of revenue coming into the county. And they get some from the government, they get it from licenses, permits, fines, interest, and miscellaneous charges, and charges for services and other taxes. Now, where they spend it, a lot of it goes to public safety, which is the police departments and security, government general spending, other capital outlay, no idea, human resources, public transportation, and then we've got physical environment. I guess that's the parks and landfills and garbage collection. Not quite sure. Around about August, September, they say, listen, guys, we're probably going to be putting your taxes up a little bit. So we're going to be sending you what is called a truth in millage notice around about August, just to let you know what we think the taxes are going to be in November. Here's a copy of it. And it says at the top there, if I can get it going. There we go. Let's make that a bit bigger. Here it is. This is not a tax bill. The tax collector will mail bills in November. So this is just basically showing us the different districts. I'm not going to go into this too much. What they are going to be billing you, either with a new budget or without the new budget. And if you have got any objections whatsoever, then come and see us by September the 9th, 2016. But the bills are exactly the same as then. The format of the bills. Okay, let's just go back to where we were. All right. And we do have a property tax schedule of dates. The taxes begin on the 1st of January, and they will put a lien on your property to let everybody know that you haven't paid for this year's taxes. March the 1st, you can file for tax exemption. If you're homesteading your home, you've got until March the 1st to file for your homestead exemption and get the exemptions. We cover that a bit later. But you do have to have your name on the deed by January the 1st. You have to be the owner of the home on January the 1st. Then April the 1st, this is to pay last year's taxes. You got until November when the tax bill came out last year until April the 1st. April Fool's Day, remember that. You've got to be have the taxes paid, otherwise they'll become delinquent. And for this tax year, around about August the 1st or so forth, they will actually send you a trim notice. And then you can start paying the taxes on the 1st of November. You'll receive a tax bill round about then, and that's when the tax year ends. Let's have a look at an actual tax bill. Looks very similar to the actual trim notice we just saw. And what we're basically doing here is looking at all of the different tax districts. Now, we simplify in the book into city, county, and school. But you can see there are school, and all the others are county. There's no city here because it's in Palmetto. It's not a city. But if this property was in the city, then there'll be a few extra ones there. And what we're looking at is the different taxing authority. The assessed value. Now, the assessed value is actually maintained and determined by the county appraiser's office, or the county assessor's office, I should say. And they do the assessment for all of the different districts, as opposed to having each district have its own assessor. And they will come up with the assessed value. Now, the assessed value, as I said, doesn't necessarily mean it's the market value. So don't go looking at your taxes to say, well, hang on a minute, my home is only worth $84,000. I'm sure it's worth more than that. All right, let's just get back to where we were. You do have a protest procedure. Excuse me. If you don't like what they say, then you got to get down there by that date. We saw it September the 9th, and go and speak to the appraiser. Come up with the reason why. If you are paying basically the same taxes as everybody else in a subdivision where everything is all sort of standardized and settled down, then the chances are you're not going to get any reduction. But if your tax bill came along for a home you just bought, which was in a bit of a state, it was foreclosure, and it was only worth half of its regular value, then you might say, well, hang on a minute, this home needs to be rehabbed. Although you think the home's worth $250, I bought it for $125, so I need my taxes reduced. And that's fine, they'll knock the taxes down. If you don't like what they say, then you've got another one, is to appeal to the Value Board of Adjustment, Value Adjustment Board, or sometimes just called the Adjustment Board, within 25 days of them mailing out that trim notice. The board consists of 2 county commissioners, 1 school board member, and 2 citizens of the county. All boards, all commissions, call you what you like, always have a mixture of people. They cannot all come from one department or one board of government members or stuff like that, because that will actually not represent everybody. If you don't like what they say, then you'll go to the courts and you can file with the local court against the property appraiser and the tax collector. And usually it's 60 days after the Value Adjustment Board is finished, and file a lawsuit. And if they agree with you, then they'll tell the board that they have to go back and the appraiser, they're going to have to redo it. Otherwise, if they agree with the tax assessment, then you really don't have much choice other than to appeal. So we've got city, county, school board budgets, and property taxes are used to pay for the majority of budgeted local services. Well, what it is paying for everything that the other revenue income sources don't. Now, we do have some exemptions, though, from having to pay property taxes. For instance, if you're a government building, they don't even get a tax bill, they don't even get assessed, they're just an immune property. Government buildings would be something like airports or county courthouses and stuff like that. We also have exempt property. This is regular property, like a church. I mean, church is not regular, but some of them are. But anyone, churches and non-profit organizations who are legally non-profit, then they will be taxed, but their taxes are totally exempt, subject to taxation, but released from all taxes. Then we have partially exempt. Partially exempt are what we're generally dealing with as real estate agents. We're talking about homesteading, and if there's a senior discount or a veteran discount and stuff like that. So taxed on only part of the assessed value. So how does this work? First of all, we're talking about claiming for homestead exemption. I covered that a little bit. You can only claim 1 principal residence in Florida as a homestead. You can either live there full time or not. A full time is, I think it's 6 months and 1 day. And you have to do it on the 1st of January. If you file before March the 1st, on or before March the 1st, then you will get that exemption applied to your taxes that year. If you file after then it will be applied next year. And we do get some exemptions because we've got school board and city and county. What we say here is for the first $25,000 of your assessed value, you are exempt $25,000 for the school, city and county. And then an additional $25,000 is exempt for city and county taxes, but not for school board for any properties that are assessed above 75. Got a little example here. Here we go. Let's supposing you live in a home which the assessed value is $49,000. So out of that $49,000, this is a big pile of dollar bills here. This is $49,000 bills. So then what we're going to talk about, of the first $25,000 of these, I'm not going to be paying any tax on that. And everything above it, in that particular case, up to $50,000 is $49,000 there, isn't it? So we've got $24,000. The $24,000 which this represents is going to be taxed. Let's have a look at a bigger home. 350,000. Homestead is assessed at 350,000. Same thing. I'm not going to be assessed on the first 25,000, so I get $25,000 tax rather on the first $25,000 exempt, city, county, and school. But now on the next 25,000, I'm going to have to pay taxes on all three. And above the 50,000, I'm exempt only for city and county, another 25,000. And then anything above 75,000 of assessed value, I've got to pay taxes on all three. So that's what we're doing here. So what we're doing here is these are the exemptions. I get $25,000 off school. I get $50,000 off city and county. If I go back to my original trim notice, or tax bill rather, you can see that here. So here's the tax districts. Let's just blow this up a little bit. There we go. So let's supposing this is just the Board of County Commissioners. The assessed value of my home is 84,000, and it's 84,000 for all the districts. They give me, because it's homesteaded, $50,000 off, so I'm only paying taxes on $34,000. Now the school, remember, only gets $25,000 exemptions. So that means you don't get such a reduction in taxes, so they want you to pay a little bit more towards the school district. So you only get $25,000 of exemptions, which brings your total down from 84 down to 59. And that's how that works. Okay. And here's the example there, the assessed value. So the assessed value would be 350. If I was working out what the exemptions were in the taxable value for schools, I would take off that 25, and that would leave me with 325 taxable value for the schools. And that's what I'll pay the taxes on at that tax rate. Assessed value of 350 for city and county, well, this is for the city, would be 50,000 minus the 350 minus the 50 equals 300. That's what I pay my taxes on. And it's the same for the county. So when you do these problems, first of all, you look at the assessed value on the home. And the question usually gives you an example of where the home is more than 75,000. So you know you can take off 25,000 for the taxes on the schools, and you can take off 50,000 for the taxable value for city and county. We do get additional exemptions, including, in addition to those, if you are a surviving spouse. This rule changed recently. It's gone from 500 to 5,000 with an amendment to the Constitution. I think it was a Constitution they amended. 5,000. So if you're legally if you're a surviving spouse, widow or widower, you get an extra 5,000. So instead of the 25 for schools, you'll get 30. If you're legally blind, you get another 5,000. And if you're a non-veteran who are totally permanently disabled, you get another 5,000. So if you're unfortunate to be a non-veteran, totally disabled, and legally blind and a surviving spouse, you will get an extra 15,000 in exemptions that you don't pay tax on. If you're a quadriplegic, totally exempt. If you're totally and permanently disabled, first responder, police, fireman, and so forth. And if a member of and if you're a spouse, then that will also be an extra 5. That would be 100% disabled. Okay. Totally exempt, and also the responder would be totally disabled. I need to change that. If you're a veteran, 10%, not 100%, but 10% disability, then you get 5,000 off, all of those. And if you're totally permanently disabled, you get 100% exemption of your taxes, and also your surviving spouse if you died on active duty. So when we're talking about these exemptions, we take the basics, which are the city and the county 50,000 and the schools 25,000. And if you, say, for instance, are a blind widow, then we'd have 5,000 for being blind, and we'd have 5,000 for being a widow. Therefore, we'd get an extra 10,000. So your total exemptions would be 35,000. If we're talking about city and county, which is 50,000 each, if I'm just a widow, then I'll get an extra 5,000, which would make it 55,000. So, for instance, what is the total exemption for a widower with a home assessed value of 75,000? So we'll get for city and county, we will get 50,000, and plus the 5,000, the total exemption would be 55,000. And how about what is the total exemption for a blind surviving spouse? Well, there's two different ones there, isn't there? There's the blind person and the surviving spouse. With a home assessor at 75,000, therefore we will get the full 50 plus the 5,000 plus the 5,000, which makes 60,000. And this is where you see the exemptions. We saw that a little bit earlier, didn't we? Here's our assessed value, and this is where. Now, if I was a blind person, this wouldn't be 50,000, it would be 55,000. If I was a blind widow, it would be 60,000, 55 plus the 5 plus the 5. If I was a widow and we're talking about the schools, then we'd add on another 5,000. So the exemption for schools wouldn't be 25, but it would be 30, and it would be 35 if I had two exemptions.